I want to talk about something I'm watching right now on the street. And so, my world is very much the junior mining world. I host a very large conference in that sector and another podcast very focused on it. And, I make it my job to stay on top of deal flow. And I'd say I've seen a massive uptick in deals hitting my desk in the last 2 months. But specifically, I'd say they're very high quality, meaning the most credible institutions and check writers that I know are putting their chips on the table right now and positioning right now. And individuals everybody knows names like Rick Rule, but the biggest check writers in the sector are names that you don't know. They're not public figures, but they're behind the scenes making tons of dough when that market starts moving. And so I'm reticent to say that tells me anything about timing. I don't think it does, because big money has a lot of patience and you can put chips on the table and wait for years. And I've seen it, but I am seeing these moves being made and I'm seeing the deal flow increase and a lot of positioning happening right now in the early stage gold equities, which is notable because we know gold has been hitting all-time highs. Yes, been selling off here last couple of days, but it's on a year tear. Central bank buying's been on 40-year records. There's a lot of evidence to support that higher gold price should maintain. Love to know your thoughts on that. First, let's start with that, Gareth. So gold outlook, balance of the year, where's your head at?
Yeah, so going into this year, I had a $2,500 price target. It was trading around 2,000. Amazingly, it's gotten there even before year end. I still think, and I'm on that case, that I do think there's further upside in gold into year end. I have an upside target. I'll show you guys in a minute on the chart how I get it, but it's basically $2,660. And again, that could be early 2025. Now, I will say just short term, the technical signals are showing us that there may be a small pullback in gold. Part of that is a negative divergence on the RSI, right? So what I'll do is let me bring up my charts real quick here, and we'll go into that just to give everyone kind of a view of what I'm seeing here. So let's look at gold. And so here we have gold, right? And what we do know about gold is that we've been hovering in this basically all-time high zone here to the upside. But we are starting to pull back here. And I just want to show this. So for those of you out there that don't know, I'm going to take off these trend lines so we keep it as simple as possible. And I'm even going to simplify this even more so. Let's get rid of that just to keep it as easy as possible to view. Now, what we have here is we had a high on gold in July and then a new high in August, right? New all-time high. But if we look at the RSI here, the RSI was down sloping. And so this is what's called in technical analysis a negative divergence, where price is going higher, but the RSI, the relative strength index, is going lower. And so these are just little breadcrumbs that tell me things like, okay, gold has had a great run. It might just need a breather. It might just get a little bit of a pullback here. And that's kind of where I'm at for the next 2 to 4 weeks. Little bit of downside, nothing crazy, but I do think, something in this realm here. Let me just draw the trend line. Something like this. This seems like a very common retrace back to about $2,425. Now, that's not a big move by any stretch. So it's a small pullback. If it breaks there, then you're talking about a little bit further downside, maybe to 2285. But all in all, and again, please understand everyone watching that net, I'm very bullish on gold. I think it's going a lot higher. It's just these little breadcrumbs are telling me that price may need to consolidate and pull back in the near term here. All right. So again, potential, these would be your two support levels down here. Now, just turning to the upside of where I kind of mentioned the 2660 level, what I did was I went to my logarithmic chart and we flip over to our longer term view and go back to price in the 1970s. And if we take that high from 1970 and we stretch it out to here, and I apologize, I have to flip over to my logarithmic chart. There we go. We got that up. But if we take that high from 1970 and we stretch it out, there is your upside target zone, which is right around 2660 to 2675. And that would be your kind of early 2025 high based on technical analysis. So I do think we're going higher. I will say that I think in 2025, we probably even go as up to later in the year 3,000. But just be aware that it's not linear. It doesn't necessarily have to happen in a straight line.
Quick break here. This episode is brought to you by West Red Lake Gold Mines. Now, if you know nothing about West Red Lake Gold Mines, let me tell you one thing. This company was founded on the back of a transaction where they purchased the Madsen mine in northwestern Ontario in an area called the Red Lake Gold District, which to date has produced around 30 million ounces of gold from some of the richest gold deposits in the world. Now, what they paid for this mine versus what they got has led legendary mining entrepreneur Frank Giustra to call this transaction the deal of the decade. And Bob Moriarty, founder of 321 Gold, was recently on my show calling West Red Lake Gold Mines one of the two most undervalued gold companies in Canada. If you're curious why these individuals are so excited about West Red Lake Gold Mines, hit the link below to learn more. Now back to the episode. So maybe pull up that chart one more time with the RSI index for me, Gareth. The gold trend has you very bullish, but the relative strength index has you considering a pullback. How is the relative strength index calculated? Like, how is this determined?
So it's basically by finding out. So, and to be honest, I'm not 100% sure the exact calculations of it, but essentially what it tells you is that overbought would be above 70. Under or oversold would be below 30. And it calculates into impact, essentially what the general, I would say, sentiment is, right? So it's almost like institutional money flow.
Okay.
So what we're seeing here is when we see a negative divergence on the RSI, we're seeing that money flow, even though price is going up, money flow, big money flow is starting to come to the downside here. All right. So again, that's telling me that there's big money that might be taking some profits up here versus what we're seeing in terms of price, which a lot of retail would look at that and say, oh man, this thing's going to the moon. Mm-hmm. It just basically is a cautionary signal that we could get a small pullback.
Yeah. Okay. And so historically, this tends to signal when something has become overbought or oversold.
That's right. That's right. So again, the only thing, it doesn't necessarily tell you, hey, we're going to crash in gold, because it doesn't tell us that at all. It just tells us that price may need a breather here to consolidate and kind of build a new base, and then it can make its next charge up. And we always have to remember that charts work just like humans, right? So if I were to run a marathon, and by the way, right now I'm not in the shape, I think you are, you run, you might have done marathons.
I do.
But you know that when you run a marathon, if someone turns to you and say, hey, go run another marathon, you're going to be like, what the heck, man? Like, I'm exhausted. So what do you need to do? You need to take a break. You need to refuel, rest, and then maybe in a few days you can run again. Charts are the same way. They run their marathon, and then they need to consolidate and energize again. And that's really what I'm seeing in gold, just needing a little time to consolidate.
Yeah. Okay. Now, when it comes to the gold equities, they've been relatively lackluster, but not so much. I mean, the producers have been doing okay. I was really waiting for earnings to come out, and a month or so ago, we saw very attractive earnings come out of, VRIC and Newmont. Mm. Anglo was flat sort of year over year, but a lot of the major miners were up. And my one hypothesis I held was, well, institutions are going to wait for that. Retail investors can jump in on sentiment, and they do all the time, right? Gold price is up. I want to be positioned. That's enough of a thesis. But institutional money is going to wait for earnings and then make their decisions. And so what's your take on gold equity performance? Any thoughts you want to share, Gareth?
Yeah, so I'm just brought up the Newmont mining chart, and the Newmont mining chart's having a pullback, but it's just been so incredibly strong. I mean, so incredibly strong. But I think what's important to look at on Newmont is that if you zoom out, I mean, gold's at all-time highs, but Newmont mining is still well below, like 30+%, 40% below its highs, even more than that. It looks like 50% below its highs. And so it's important to understand why that is, right? Why isn't Newmont at all-time highs? And the answer is that during the 2020 to 2023 period, price of gold was not going up, but their costs were exponentially increasing. Labor, equipment, drilling, all these type of costs because of inflation. But they weren't able to capitalize. In fact, they were taking hits. They were losing money because of that, because of those costs, but gold wasn't going up. Now gold has started to compensate them. We're starting to see those earnings coming through. And what I think is the higher gold goes, as long as gold, if I'm right on gold, and it does go to 2660 and then 3000, the miners are going to be an amazing opportunity because their costs now, yeah, they might go up 3% a year, but if gold can go up 10% a year or 15%, then they're just printing money, and it literally becomes a printing money situation. And so this is where you get into the juniors, where the juniors historically struggle because they need price. They're not as big as a Newmont, but they can really capitalize if they find some gold on making profits as well. And so I like this. I would say on Newmont, I'm saying to myself, I'm not in Newmont right now, and I'm looking at it. I'm like, you know what? Let me let it pull back a little before I jump in. But I do think that the miners are a place you buy the dip on at this point.